Let's talk to Mike Ingram. He's the Chief Market Strategist for WHR. And a very good morning to you, young Mike. Right, what a weekend that was. World Cup.
Yes.
And more importantly, Mr. Trump.
Yes.
And even more importantly, Brexit. The S&P 500 almost back at sort of January highs, back end of last week. European markets sort of holding in. The FTSE almost looks a bit dull to me. It's up a smidge.
It's all a bit drifty, isn't it? I mean, the summer's definitely here. Volumes are drying up. I mean, you'd have to say that, you know, if you look at things like implied volatility, one of my favourite subjects, bore everybody at dinner parties, has come back a little bit. People seem to be reasonably comfortable where the Fed's coming from, where the Bank of England's coming from, at least today. And the market's just generally drifty. I mean, we've kicked off the earnings season on Friday, half decent numbers from JP Morgan City, although you'd have to say expectations weren't particularly high for the second quarter. And I think it's probably earnings absent any further, you know, global trade related tweets and things like that. But we are, I'm afraid, in the UK fast approaching crunch time on Brexit, aren't we? And for me, it was quite interesting to see the market's reaction a week ago to the cabinet resignations that we had over the previous weekend. So, you know, you had David Davis go, and you saw the pound marked up, and they were thinking, well, David Davis go, even greater chance of a softer Brexit. And then Boris Johnson resigns, pound's very much marked down. Obviously worried about Theresa May's position, etc. And at the moment, a leadership challenge seems to be off the table. But I'm wondering how long that's going to persist, because, you know, I mean, no matter which side of the debate you are, whether you're a Remainer or a Brexiteer, I think very, very few people who think that what came out of Chequers, that this agreement, is actually workable. It certainly doesn't seem to be WTO compliant. It seems to be very unlikely that the EU27 will accept it in its current form. They're going to want still further concessions. And, you know, the reason I mentioned the reaction of the pound a week ago is you cannot separate the political from the economic. And it's not a linear thing. You know, you go, well, you know, if Theresa May's in a weak position, etc. Softer Brexit, you got that, maybe you're in that sweet spot, at least as far as the market's concerned. But you tip over just that little bit, and all of a sudden you've got political turmoil. What's the end game there? Is it a Corbyn government? Because we know that the market, generally speaking, is not going to like that
now, right?
Yeah, well, you know, if the polls are anything to go by, absolutely. But I mean, it's interesting to see over the last 24 hours Justin Green calling for a second referendum. And I kind of get the feeling that both parties, it doesn't matter where you are on the political spectrum, other than the Liberals, who are obviously, you know, diehard Remainers, but Labour Party is massively divided on this subject, as are the Conservatives. And the only way they get any political cover for the deal, which is currently on the table, is by going back to the people. The issue there becomes we've run out of time, effectively, because by the time we actually know what the final form of the deal is going to be, we're going to be October, November, perhaps this year, and you know, you haven't got enough time to call a referendum. So you'd have to go back to the EU27 and say, well, if you want an extension of Article 50, I very much doubt they wouldn't grant it, but it's certainly not straightforward. But it's all very, very messy, and it's interesting to note that you know, even though this trade, you know, which many have had on for a long time, really since the referendum, of being long the sort of, you know, the export exposure and short of the UK domestic exposure, that's been a trade which has been pretty flat during the course of 2017, but it's actually started to pay dividends over the last few weeks. And, you know, obviously there are things external to the UK, such as higher oil prices, etc., which helped to bump that up. But you can't help but feeling there's a bit of an inflection point there in terms of the whole, you know, it's gone from, oh, right, well, you know, I'm bored, I don't know what's going on, you know, it's all confusing. But one thing you do know is within the next few months, a decision has to be made one way or the other. You know, there will either be tangible progress or there won't. And if there isn't, that's going to have significant consequences, significant political consequences, significant economic consequences, significant market consequences. And, you know, you just get the feeling the market's just starting to get its head around that now. They've been bored by it for so long, but now they're having to care about it. And as I said, you know, that what we saw last week on that Monday around sterling was kind of that, you know, that was just echoes of, I think, of what is to come.
Okay, so let's just wrap up, okay, in terms of being the Chief Investment Officer, the strategist, et cetera, okay. How do you factor this in over the summer, okay? What's your field position? Yeah, lots of people are saying we're in the 9th innings, you know, we're at the end of the cycle. Okay, these must be worrying times, or am I old and grey and it's different this time?
Well, we're both kind of old and grey, I suppose, Moose, aren't we? As you know. Trust me, you wouldn't want to see me in a bikini. Right, so, on a more serious note, it's clearly become trickier. I mean, you know, we've come out of an investment environment where it was very difficult to actually get things wrong. Now, it's much easier to get things wrong. One thing we did note, because I mean, we have sort of very regular, you know, meetings to look at asset allocation and so on and so forth, is, you know, if despite the sort of turmoil that we've had in the first, you know, 6 months of the year, if you look at the fixed income space, you know, you saw the traditional safe havens, perhaps, they've underperformed equity, generally speaking. Now, on a risk-adjusted basis, you could say, well, you know, there's not much in it. But you know, if you look on an absolute basis, then you know, equities have generally come ahead. And you mentioned the S&P again. Obviously, you know, you've had a bit of a tailwind from a rather stronger dollar in the second quarter. You know, so that's flipped over from the first quarter performance. Of course, you always have to be thoughtful, but I mean, you have to be very, very careful at the moment. At the moment, to some extent, you say, well, hang on, as long as economic growth remains strong, you know, and there's a little bit of momentum come out of that, you know, arguably over the last 2 or 3 months. It's difficult to say that the economy is slowing significantly or it's a weak global economy. It's not happening. Earnings are coming in, you know, at or about expectations at the start of the year. Some markets are ahead, like the US. UK is actually ahead of expectations at the start of the year. You know, you've got some other markets like the Europe, which is marginally behind. But, you know, net, you're ahead of the game. Inflation certainly hasn't taken off. You know, the only really significant major upwards inflation surprise is the US. You could argue Japan, but where Japan was coming from, well, that's probably a positive surprise, you know, it's still an environment which favours risk assets, but you have to be pretty agile. It's not a melt up like 2017
or the beginning of this year.
And we've got to always continually challenge our suppositions, our assumptions. You've got to keep an eye on the data, and you know, if you start to see something you don't like, you have to be prepared to bite that bullet and make some changes.
On that note, young Mike, we've run out of time. Nice to see you in 2 weeks' time. That's Mike Ingram from WH Ireland. Thank you.